Good day, good evening. Danny here, and I want to talk to you about what I consider a really exciting opportunity. And I have the person who represents this opportunity with me here. And I thought it would be always better to not just hear things from us, from me, but rather go straight to the source and get the source's intake and impression and the knowledge. And so that's for me always the favorable things. I can help send the message, but there's no better way than asking the source. So Orin, thank you very much for joining me today. We're going to go over a few things in a moment. I appreciate you taking the time, of course. I'm going to just want to say before we dive in, and this is going to be a bit of a Q&A kind of a session, I want to share with you why I find this deal very exciting, or more exciting than our traditional or average deal. And this deal it hits all the things that, I've been doing it for 20 years, and usually I hear from my clients the following. The ideal deal will be a newer home in a growing state, if possible that it's tenant-occupied, that it's cash flowing, and if we can get some equity from day one, it's great. And this is one of those deals, right? It hits all of those things that I just mentioned. I'm not just saying it by coincidence. It's just all those things. The one thing that I could say I feel that I'm excited about, but sometimes investors are a little bit more hesitant, is that the cash flow is nice. It's not amazing, right? That would be the only gap that I see from investors many times. They say, I wish the cash flow was $600-700 a month or $500 a month. That's not the case. It's not the case anywhere pretty much these days, unless it's an exception. But it's still a very nice cash flow. And I thought we'll have a discussion with Orin about those opportunities, about those details, so you can get a better understanding of why I'm excited about it. Okay, Orin, with all this intro, let's kind of dive into you. So why don't you just start with a introduction, and then we'll take it from there. Dive straight to those questions that we felt that are important to tackle, that keep coming up.
All right. So first and foremost, Dani, thank you for having me. I'm excited. I'm not a guy that frequently go on podcasts, so I'm excited to experience a new theme. Hopefully, it's going to be providing as much as knowledge as possible. So thank you for having me.
Absolutely, pleasure. Okay. So Orin, let's kind of start with the more. So I want to say we're going to tackle, so people know what's going to come up in the next 20-ish minutes. We're going to talk about Florida. We're going to talk about specifically those houses. We're going to talk about some of the leasing aspect, leasing the tenants and leasing aspect of this transaction. We're going to talk about some of the typically asked questions such as insurance and hurricanes and all those things, and construction costs and building codes. We're not going to dive into one of those, we're not deeply, but we're definitely going to touch on those mainly asked questions. So it's kind of interesting that as we speak, the questions are being added on my end. Okay, so let's start with Florida a little bit. I know why I like Florida, and I think I shared it with our followers. Tell me your take a little bit. You live in Florida. You're heavily exposed investing in Florida. I'm using Florida as at large. You can definitely narrow it down, talk about a little bit about Florida at large, but also take it down to the specific geographies we are considering at the moment.
All right, thank you. So Florida, in my opinion, is first and foremost is the best return on value or cost. I think in terms of affordability, lifestyle, accessibility, low taxes, the fact that the state is relatively easy on and encouraging business and entrepreneurship. So overall employment, growth, in terms of tourism and migration, Florida, in almost every aspect, really led the nation in the past decade. I believe it was almost 10 years ago that Florida became a larger state in terms of population than New York. So we see a massive migration from the Northeast, the cold Northeast, the Midwest, to Florida. And on average, we see about 1,000 new people arrive or migrating to Florida on a daily basis, and about 360,000 people migrate to Florida on an annual basis. So when you really break it down, Florida is adding a relatively large city almost every year in terms of the population growth.
Right.
Post-COVID, actually, Florida even boomed even more. So we're talking about migration numbers that, much higher than 1,000 people a day.
Gotcha. Okay. So definitely the attraction is strong migration patterns for, historically speaking. We know that there's no state income tax. We heard that the weather is pretty nice most of the year. Definitely attraction for nicer than the Northeast, not nicer than California, maybe. I'm a little bit biased here. So that's good. So migration pattern and strong prediction, future for migration pattern are, for us, it just means buyers and renters are coming in, which is really, really important. Perfect. Okay. Do you want to talk about the sub geographies? We're mainly focusing on Ocala, which is the greater Orlando area. We're talking about Northport, Cape Coral. Those are more southwest Florida. Maybe touch on why you found those areas to be more attractive as someone who's operating throughout Florida. Why those areas you found them to be more appealing?
So I'll start by preferencing or referencing the crisis that we have in America. I think that right now there is a massive crisis of affordability overall in America. One of the biggest comparisons we can have, like for instance, between the differences between Florida and California, is that Florida still has areas that are relatively affordable. So we started by really trying to recognize a crisis or a problem. And right now there is about somewhere between 3.9 to 5 million homes that are affordable houses short in the United States. So we wanted to really tackle these areas where specifically we know that are still relatively affordable. And by definition, for me, affordable is below the median household or median value of a home in America, which right now I believe that the median home value in America is around $400,000. So we want to stay relatively lower than the median house value in area. So we specifically picked areas where, one, we believe that that are solving a need or solving a problem, which is affordability, and these areas are still affordable. And secondly, areas that are consistently shown growth over time. So if you really, we like to think about real estate over a period of 10 years or between 5 to 10 years, long terms. And if you really take the actual, graph for these areas over a long period of time, these areas always proven themselves to, one, being relatively consistent, and secondly, they can actually have real estate that's still generating cash flow and affordable and solving a need for first-time home buyers or people who migrate and looking for more affordable lifestyle, migrate to Florida and looking for more affordable lifestyle.
All right. So
specifically on the markets that we're in, Ocala is one of the market that we are most excited about. We are not the only ones. It's an area that basically we see all the large home builders of America right now are moving relatively aggressively to Ocala. Ocala is bringing a confluence of opportunities. One is very affordable lifestyle. So land is still very cheap relatively to most other places. Florida over the last decade saw a massive appreciation in land, and that becomes a little more difficult and attainable to really build homes that are within the affordable. margins, and specifically Ocala is still, land values are still relatively low, and the local municipalities are very supportive of growth. So that makes the overall between the local bureaucracy and the relatively low cost of land still gives us an opportunity to build homes in a relatively low and affordable cost that we can provide a great product for our buyers.
Got it. Makes sense. When you're the houses that we're talking about that are available for our clients to buy, those are relatively new, right? I would say 1 to maybe few months old to up to 2 years old, depending which one. Maybe the one in Ocala are more 1 to 2 years old. Can you elaborate a little bit about the building specs and what differentiation you guys put into place to position your product to be somewhat better, maybe even say superior to the other builders that are building in the area, both as a product, as a house, but also maybe there's specific things that you factor in, knowing you are heading to rent those houses, to lease those houses, targeting tenants in the first place.
So I'll start by saying that, as a home builder, as a home builder, I didn't start as a home builder. I actually come from the SFR space, or, I built a relatively large rental portfolios when I bought from the banks between 2010 to 2018. I evolved to become a home builder. So every home that we built or we're building is always have the idea of a product that I would love and be proud to have on my balance sheet. So every home that we build, the mindset is what if we don't even sell one single home and we decide to rent every single home and put it on our balance sheet, and we wanted to have a product that we will be proud to have. So that's first. Second of all, the overall home building industry is a quite interesting dynamics, because most of the companies that we compete with are relatively between 50 to 100-year-old companies. Some of them are public companies, but they are very, very slow to adapt, change, and really, if it's not broken, they never fix it. So I found getting into the home building industry in 2018, I thought that there is a great opportunity to come with new innovative design and kind of differentiate ourselves in the market, which was a great success for us over the last 5 years. We all of our homes, we build it again, builders at this point want to put the very least, at the minimum they can in every home. We put tile flooring, we put quartz countertops, we make sure that we have open space design. The elevation is very modern. We have Energy Star accreditation for our homes that we are building, so it's energy efficient. We put some of our homes that we're building in some areas, and we can separately talk about it, in like Northport and Cape Coral. We're actually building a zero energy ready homes, which means that they're homes that you actually put solar panel on them and they have zero power bill. Or if it's not zero power bill, the idea is that it's going to be somewhere between $0 to $10, $20, no more than that's probably the most efficient product you can find in the market. And the idea is that the home actually generated more energy than what it consumes. So in the areas of Northport, Cape Coral, we actually building zero energy ready homes, which is exciting product. I encourage everybody that watching this podcast to go in our website. We have a really an incredible product that I'm proud to say that is really what differentiating us in the market and gives us much better opportunity, and people specifically choose our product. We have this thing with our competitors on the retail side that where we say dare to compare. So if someone is walking into our model home and he's coming with a sheet of a different home builder with maybe a more advantageous prices, and then when you calculate all the upgrades and things that we put in the homes, they realize that our home is much, give them a much greater value over long term. So we actually encourage our buyers to dare to compare. We feel very confident with the product that we are building, with the design, the elevation, and the finishes. And again, we offer incredible differentiating product in affordable markets, in areas where some people would come from California and would really look at the home and say, I can't believe that people get so much for sub $400,000 or meet $300,000 product. So that's something we're very, very proud of.
So I want to kind of make sure we fully go through this point of comparing your product to the other houses in the area. Because if I am an investor and I'm very money-minded, right, I look at the cost, I look at the rent, right, and I'm like, what's my ROI or cap rate or whatever I'm going to measure. And that's just doing a very superficial evaluation without factoring other things such as upgrade, etc. So you're saying you can compare the other or additional things or features that we bring into the house, which makes our product maybe a little bit more expensive, but by far better. Can you outline 3-4 of those examples so I can understand, so it's actually more tangible?
Sure. One of the biggest thing is, and again, just for the audience, we actually hold a lot of our properties ourselves. So just as the potential investors that are listening to this podcast, we are internally also holding a buyer of our own homes. So we actually went through the exercise. Just to give you an example, a few years ago, we used to buy and build homes with LVP flooring. LVP flooring created a nightmare for us in terms of CapEx or repair and maintenance. There was always a gap between in the sides. When between the LVP to the baseboards, that was a big nightmare. People would wash the floor and created mold and other problems, and there are seams that are very, very clearly seen. And we decided that we don't want these CapEx or repair and maintenance, and we kind of moved to tile flooring throughout. If as a property manager, anyone would know that the biggest cost is really either replacing LVPs or replacing carpets. So we said, you know what, if it's going to cost us, $3,000-4,000 more to put tile flooring all of our homes, we're going to put tile flooring all of our homes. And now, there is some elements of perceived value, right? Like, there is countertops. You measure the multiple in countertops. So basically, a lot of people put granite, but granite is like something that, in 10 years ago thing. Now people are looking for modern style quartz. Now we would say, hey, why would you spend more money on quartz? This is a rental property. Because I believe that maybe I'm going to spend, the extra $1,000 or $2,000 on quartz, but I'm going to get an ROI, a clear multiple on it when I come to lease the home. Those are the kind of things that, we did an exercise versus, a more America's most affordable builder. A very large company, top 10 home builder in America, and they have the most affordable product in the market. And they do the absolute bare minimum. Their claim of fame is having the most affordable product in the market. So we kind of did a comparison side by side, who actually generate a higher yield on the property. And it was very, very clear to us that people are willing to pay somewhere between $300 to $500 more on our rental property as a fact. So a property that we rent for $2,200, $2,300, they rent for $1,900. So is it worth it to pay, $30,000 or $40,000? Absolutely, because if you're going to do the calculation from a cap rate or yield standpoint, you're going to see that our property we actually long-term will yield better. Now, another big element of it is really long-term CapEx. How much money would you spend in a 10-year time period on really repair and maintenance? I can tell you with the properties, when we create performance for the properties that we build, if we really used a real cost on CapEx, people would say that we're lying on the Excel sheets. But we really do have a very, very minimal CapEx cost on our properties. So we designed the product specifically to hedge the risk by, one, having a great product for rent, and two, a differentiating product when we try to retail the property. In the end of the day, a good real estate is a cumulative return of both. nobody ever got rich just by having, cash flow. The combination and why investing in Florida is an opportunity in the market where most people made their lion's share of the money with really consistent appreciation, in Florida, in the Florida market. And that's what we are aiming for, to having a nice balanced product between great to have on my balance sheet and at the same time long-term appreciation with opportunity to sell the product.
Okay, that makes sense. Okay, so just to kind of summarize that section, if someone goes and compares apples to apples, there's going to be a differentiation, and that will be how the property looks like. But also, and I would say more importantly for remote investors, is the need to replace something, repair, replace like a carpet or flooring in the future. And we all know how when those things happen, there's really more friction and frustration with most investors. And actually, you can just say there's a good value in pricing something like this, knowing you will very likely need to handle this part, let's say the flooring in the future, for many, many, many years, especially when it's tired. So there's pricing of hustle, let's just call it the hustle price type of thing. Okay. Let's talk about the who are the tenants? What can you tell us that, like, what do you usually see? Who's paying almost $2,500 a month? What's their profile? How challenging, quickly, slowly you're seeing the listing happen? These days, do you see a very significant seasonality between summer and the winter, or not so much? Anything you can elaborate on that aspect will be very helpful.
For sure. So, I'll start by saying that the Florida rental market has been relatively predictable throughout, the last decade that I've been leasing properties. Our rental absorption is phenomenal. When we have a home for rent, we normally rent it within, the first 30 days. It's never a big challenge, and it's very predictable for us to actually kind of measure the pace of absorption. In terms of your question was the type of tenants that we're getting.
Yeah, so who's renting those houses? Yeah.
So yeah, it's a big mix. So it's a very large mix. We have again, going back to the migration to Florida. So you have a more stronger base families coming from the Northeast, Midwest, and at the same time, we have first time sort of people that wanted to be home buyers, and unfortunately, because of the large interest rate environment, they decided to kind of wait a bit and stay on the sideline and lease these properties. We have a big mix. It's very difficult to kind of measure. I would say that the Northport area, we get a good crowd of retirees, much higher than in Ocala. In Ocala, we're getting a mix of actually, it's quite surprising, but people that are moving within Florida. So you see South Floridians that are moving to Central Florida because South Florida became unaffordable completely. So there is a dynamic which is quite interesting, that someone that bought a house in somewhere around Broward or Miami-Dade County, that the house has appreciated so significantly over the last few years, is saying, hey, my house that I bought for $200,000 or $300,000 few years ago now is worth $600,000. And then, they're selling their houses in South Florida and basically either buying or renting new homes in a more affordable area, in Ocala or Northport or Cape Coral. So we see migration within the state to the more affordable areas because South Florida becoming more unaffordable.
And those are typically 12-month leases. Is that what you commonly see?
Yes. So, by Florida, typical Florida contract is 1 year. We normally, that's another thing that is very interesting with our product. We find that our tenant actually stay much longer in our properties. On average, people stay in our property for 2.5 years. People ask me, what's the benefit? Why, doing single family rentals and not multifamily? And I will always say that it's so much easier to manage a tenant that is not a transitionary tenant. That people actually have a sense of home ownership on the property. And potentially, the people that are actually renting from us are actually people that potentially in the future will buy a house from us. So that's another big caveat to our product, because we really want people to have a sense of ownership and to really keep the options open for both sides.
Let's talk about some of the common risks or things that are intimidating people, and I want to emphasize here, maybe say to our clients, to those who are listening, try to not listen to some idea that you heard of a friend of a friend of a friend. Those are typically not grounded in reality. And the classical example of that would be property insurance, right? So we've done we've done research or getting quotes as part of collaboration with the team here. But why want you to tackle from your perspective maybe the three main things that keep coming up, which are the insurance, right? The hurricanes, which is somehow related to the insurance, and also the fact that in most of those areas, school rating is not high. Those are things that are always coming back to us with some questions from our clients.
All right, so that's all great questions. So I'll start with the insurance. Actually, insurance was one of the things that was struck me by the biggest surprise over the last 6 months, because I always see, these bowstring kind of headlines in the news about Florida insurance becoming out of reach. I don't know. I actually, we again, for the exercise that we worked with you and for internally, we actually got pretty attractive insurance quotes. So, nothing different than a typical insurance. So we see prices around areas that actually were in the eye of the hurricanes multiple times in the last 3 years. We're getting insurance in the around $500 to $600 a year, which is pretty amazing. Now, I'm sure the big factor of the relatively low cost of insurance is the fact that we are building newer homes. The homes that we're building actually are built to the code that was designed to sustain themselves in hurricane. And I can tell you firsthand, in the last 3 years, we had 3 hurricanes. 2 of them actually, Northport, 𝗁𝗂𝗁 were in the eye of the storm, and we didn't have any damage. The only damage that we had was really business interruption, which means that the local municipalities kind of didn't have the ability to work and operate, and we couldn't really submit new permits, or a lot of our subcontractors kind of diverted their attention into crisis management rather than building new homes. And obviously, they got much better checks from the insurance company. So except of delay of the cycle time in construction, in terms of actual material damage, we didn't see anything material in our homes, specifically because we build homes in code for the most part, that the homes sustain up to 180 miles winds. So and now the counties actually ask us to elevate the homes. So we put the homes are relatively higher over the crown of the road to the point where we actually are kind of safe from flooding as well. So we didn't see any material damage over the last 3 hurricanes. And we feel very confident with the fact that we have a product that can sustain, a major hurricanes. Now, in terms of rental market, I think this is an interesting fact. I don't know if it's if anyone ever measured the data or the information, but I can tell you guys, after Hurricane Ian, rents went up by 40 or 50%. So all of a sudden, there's something that seems like a negative hitting the market actually turns into, from a real estate opportunity, it becomes a great opportunity because, this Hurricane Ian created such a massive destruction where it mobilized teams and crews from all over America, created an immediate need to support. And when you really come and think about it from a capital standpoint, there was a $50 billion of insurance money that was kind of infused in the local areas that created financial boosts. So from a real estate investment standpoint, it's actually created a good opportunity and increased our rents. Like specifically in Northport, we rented our homes for north of $3,000, and some people actually raised their rents to up to $4,000. Not that I think that that's realistic, but that's what happened in the market after Hurricane Ian.
It's interesting that you're stating that, because as someone who's been investing in Florida for approximately 20 years, I would say my first purchase in Florida was 2005, right? So just about 20 years. I may be the only one who's, I don't want to say I love hurricanes and insurance incidents, but I learned that the reality is after insurance, a hurricane comes through, usually the rental market gets better. And if you're insured, maybe the coverage will be a little bit more expensive, but it's manageable. We did an exercise as a preparation for this, package of properties in all areas, and we were blown away. Actually, the insurance representative that we worked with was blown away by himself, at least the insurance, how cheap relatively, I mean, they're absolutely and relatively cheap, without, trimming on coverage. So it wasn't like shrink coverage, and no wonder it's cheap. And I think it's important to emphasize that big part of that aspect of insurance is the fact that those are new houses built to recent updated codes, which codes are always get updated after a major, I don't know always, but major hurricanes. You were telling me that now to build, you need 3 or 4 times more dirt and trucks coming in than what was the previous.
I wish it was 3 or 4, but yeah.
Yeah, much more than before to elevate. So the fact it's a new home, new roof, all those new things for insurance carriers in Florida, that matters a lot. Roof, age, elevation, code, those that automatically impact your insurance rates versus an older home. By the way, I think that also since Ian, we've seen the spike of insurance rates, and then slow, and some companies always running out temporarily. Others see the opportunity, they're coming in, and there's always some uptick of cost in insurance, and then it kind of the market corrects itself. So I've been there for many years. All my insurance are definitely went up, but nothing crazy. So instead of debating about insurance, get a quote. Just get a quote. That's it.
Yeah, I was surprised until I saw the quote. Like yeah. I expected a lot more. I was actually underwriting insurance much higher than what we actually got a real quote. Don't tell that to the insurance companies, because they're not.
My insurance guy knows, because I called him. I said that doesn't make sense. He says I double checked before sending, because I was surprised. Right, so even he was surprised. But that's good. I think part of it was a discount that we're able to get as a group, but that's just just a little bit extra. Now, one of the other things that we talked about insurance and hurricanes, and maybe it's important to kind of combine the insurance rates. We talked about it in the hurricanes with the fact that those are new houses. Also, I think your windows are there's something special with the windows you guys put in the houses, if I remember correctly.
It's by Florida code. We actually needs to provide a contingency plan for the windows. So we actually put shutters and provide it to the home buyers or the renters, that there's going to be package of shutters. And from a property management standpoint, if we know that the hurricane, the good thing about hurricane is that we can actually prepare.
Right.
And we offer that service to our renters to go and put the shutters on the homes. Some of our homes have impact windows, but I wouldn't say that it's a sort of an upgrade that we don't really provide as a typical product. But the mandate is to have shutters on the windows.
So it sounds like if I'm buying a home according to the code, there's a set of shutters, maybe in the garage, that I have plenty of time to go as a tenant or as a service to the tenant and cover each one of those windows, and that's definitely should reduce the potential impact of wind damages or some object flying.
Exactly.
Perfect. Okay. You want to say something about schools or school rating in many of the areas we're talking about, or maybe you should say
that's another great point, that school information is relatively subjective, but I would say that one of the things that is really common to these areas is they're emerging markets. So if you really look at the amount of population growth in an area like Ocala or Northport or 𝗁𝗵𝗂𝘁𝗄 over the last decade, you see a massive population growth. Population growth increases property tax, and property tax or overall taxes and population growth automatically increase the budgets in the local municipalities. And if you really look at the school kind of graph of improvement, all these markets are seeing significant improvements in school district rating, and I anticipate that that's going to keep improving over the next few years. I believe that's going to be one of those things that we're going to see improvement, especially in a market like Northport, where I already see that in the newer schools with the better facilities and relatively expansion, and they actually require impact fees and school district fees that basically for the intent of really providing a better opportunities in the local markets.
I want to add something to that, because I may be a little bit at fault here, because for years I've been teaching my clients and talking about it, how school rating is critical. And it is. I'm not saying it isn't. But school rating is very much national grading and not a local grading. And then you have to think to yourself, in some part of the country, you will have school districts with lower school rating, right? Let's just say 4 or 5-ish, give or take, which is very different than other parts of the country that we're seeing 7, 8, 9, and we buy in those areas. For example, Orlando, many parts of Tampa, other parts of Florida, Georgia, Atlanta, that were there as well. And you need to ask yourself, wait, hang on a second. We have 5 million people living in Tampa, maybe more in the greater Tampa area. We have 3.5, 4-ish, in the Orlando area. That means hundreds of thousands of students going to schools, and they're all are seriously suffering by going to the default school system, which is not bad, it's just lower rated. So that means across many parts of Florida, you will see lower school rating, yet this is what the de facto, the default that people send their kids to. And those are not bad schools just because of the rating, it's just relatively to other parts of the country. So you got to keep that in mind and just say, you know what, if this is across the board here, like it's not like we're going to a certain community where that's a lower school rating, but throughout the metro or the county or whatever, or the school district, all the other schools are better. This is it, right? You will see once in a while a section or a pocket with better school rating, and usually those houses in that area will reflect that. So you need to recalibrate, we need to recalibrate our thinking about school system and not be intimidated. Well, this is the kind of the common thread across most schools in the area, right? And those where those kids are going, they're just lower rating in this state. Hopefully, the taxes that are coming in will slowly, very slowly, those things happen and will improve that. I sure hope so.
Florida overall as a state have done really well over the last 8 years in improving the overall school district results. So Florida have been, our governor Ron DeSantis has been doing a great job improving the Florida and putting them on a map in terms of education.
I want to finish up with a final thought about something that does come up since we started telling our clients about this opportunity. And they all come back and say, wait, what's going on here? Why is this guy or this company, your Danny saying there's such great houses and everything and location, why they're giving so many deep discounts? Like, what's the catch? What are we missing here? And it's almost every person that we spoke to brought that point. So let's tackle that. So what's going on? Come on, man. What are we not seeing?
That's a great question, and I'll go to the basic. We are a home builder, and we are a home builder that we need to manufacture as many homes as possible. So we are a production facility that we need to really put as many homes as possible on the ground. In today's environment, as opposed to a year and a half ago, if I built 1,000 homes, I will immediately sell all 1,000 homes because that was the demand in the market. In a high interest and a relatively very kind of volatile market, the level of absorption that we're getting to being a production builder is really doesn't always match, which means that, if we got accustomed to selling in each market 10 homes a month, so right now we are selling 4. And we kind of need to reshuffle our equity, taking our equity and rebuild more homes because we have a large staff, we have a big team, and we need to put together as many homes as possible. So in order for us to keep the flow of really building a lot of homes, we're going to take some discounts. All home builders are doing it right now. The large, starting from Lennar and DR, actually they started facilities or relatively large companies that are going to buy from them some of the inventory for rent. So we're not the only one in the industry that does it right now. We need to increase absorption. And because we need to increase absorption, we go and build more relationship with individuals like you and other relatively working professional that are looking to have a safe investment and something consistent. So we build a lot of relationship. And this is another form for us to move as many homes as possible and keep the factory going as much as possible. We don't really intend to keep on necessarily wholesale properties for the long-term future. It's another avenue for us, but as of right now, I think it's a good strategy. It's a win-win for our buyers, for our relationships. And in the near future, we are looking to actually build full new subdivisions with a lot of partnerships, with really collaborating with individuals like yourself and your audience to build full subdivisions just for rent. It's an emerging asset class. It's something that nobody talked about a few years ago, but right now we're talking about this asset class more than they talk about multifamily. So I think it's a good time fundamentally for us to really build and cultivate those relationships that are going to help us really kind of, get a good deal from us right now. We'll be very happy with the results. And then a few years from now, we can come and say, hey, we have these incredible subdivisions. Let's build it for rent, and it's going to give a good opportunity. And then again, we can increase productivity and increase our overall level of productions.
Excellent. All right. That sounds good. I think that can conclude everything that I wanted to cover, and mainly the most asked question regarding this opportunity. Like I said earlier, at the beginning of this episode or session, why I found this attractive to begin with. It just hits all the main things that we're looking for as investors, or things that I hear from you guys for many, many years. I'm a strong believer in Florida altogether. Personally, I own there. So that's just not me talking about it generally. I actually own and have really good experiences with tenants in Florida, by the way, just FYI. So I want to thank you very much for taking the time and answering all those questions. And I want to tell all of you, I'm glad you're listening. You stayed all the way here all along, and you listened to the information. I'm sure you have a few more questions like we typically do. Reach out. Let's have a conversation. Let's see if this is a good fit for what you're trying to accomplish. You know how to get a hold of us. I'll talk to you guys very, very soon. Orin, thank you very much for taking the time.
Thank you very much, Danny, for having me. I look forward to be a good partner and provide as much as information that you guys may need. I just want to add one last comment that I think another big advantage of really collaborating is the fact that we are vertically integrated. So we can provide service through the whole supply chain. So that's another comment I wanted to kind of add up to the conversation.
We haven't talked about that, but we'll definitely make sure we mention that to our clients that is part of it. Meaning, in other words, the property management services are also they have that to support our clients as well. So
if you guys choose to, obviously.
Yeah, if you choose, absolutely. Perfect. All right, everyone. Thank you very much.
Thank you.
Bye-bye.
Bye-bye.